Yeah, we're seeing, a lot of times people look to the 10-year Treasury to be an indicator as far as where interest rates are headed, and they're trending up for certainly. This morning we hit 2.22 in the 10-year Treasury.
Welcome to another edition of Tuesday Tips with Brent and Lee. If this is the first time you've been to my channel, my name is Lee Brickey, and here we talk about real estate, mortgages, and money. And on Tuesday, we talk mortgages with Brent Starts from Unitas Lending. So today, Brent and I want to go over what's happening in the market right now with prices, inventory, and with rates, because all three are all over the place depending on what market you're in. But we've seen here in South Florida, from Palm Beach County to Port St. Lucie, inventory is really super short again. Bidding wars are beginning to heat up. People are finding that they're having a harder time to find the right home. And we're just reading reports today in Florida. It is it's the worst place for first-time buyers right now because of pricing and because of all the bidding wars. It just makes it very difficult for an FHA loan right now to get accepted in a bidding war. So we're going to try to go over all of these things today and try to bring some light to it. So let's get started by talking right now about the market with Brent and what's happening with the amount of inventory. Brent, we're seeing inventory is really starting to diminish right now, but we are rolling into the spring buying season. So I would think that more people will be putting their homes on the market the closer we get to summer. Historically, what's your thought behind that?
Well, I've seen that historically as well, and I think that'll provide some additional options for individuals looking to purchase here in Port St. Lucie and other areas of Florida. So I'm excited about that. Interest rates are going up, so that is going to be an impact on, as far as affordability, especially for the local folks here in Florida, because we've got competition from those coming from out of state. And I see that right now. I see as the biggest challenge right now for the locals is to compete with individuals selling their home for $800-900 million and moving down to Florida. So I see that being a challenge.
Well, it's not just coming out of Florida, it's coming from Florida. I put out a little clip the other day about most of the buyers we're seeing coming up from, coming into Port St. Lucie on our listings that we've had this year. All of them have been basically from Fort Lauderdale, and all the contracts we've gone into have been from Broward County. So, people are getting out of Broward County right now and Dade County and, Southern Palm Beach County, even, to get away from the traffic and the population growth because of all of the corporations that have come in to Florida over the last couple of years because of just escaping, lockdowns from COVID, because they needed to keep doing business. And now they're down here. They're like, well, we're not leaving because, of the tax situations now. So the flow of people coming to Florida is I don't see stopping anytime soon. So, I mean, what's your opinion on that?
That's what I'm seeing too. That's exactly right. We're seeing so many people moving up from Miami specifically. They're being priced out of Miami, by the Northeasterners coming down. And that's where, let's face it, the 95 freeway goes up to the Eastern Seaboard. And so many people are familiar with this area and familiar with Miami because that's where they vacation for years. And so baby boomers are retiring and moving there, selling their homes and moving, and like you said, Lee, large corporations coming down, Goldman Sachs and to West Palm and Miami. That type of migration these are strong buyers with capital to spend, and so it's pricing out the locals from Miami. They're moving up to they want to stay in Florida, and so Port St. Lucie is a great place to land. In Martin County, St. Lucie County, that area.
So I read in the market news a couple of days ago where they said that 4 out of 10 New Yorkers are moving out of the state. So where are those people going? At least 3 of them are coming here. I mean, it's just right. It's been that situation. So So we can all agree that, Florida's going to continue to be a place for people to come. It always has been, but it seems to be more and more migration. I just got off the phone with a client this morning on a Zoom call. She's coming down next week. She's selling her condo in New York, and she's coming down to buy in Port St. Lucie also. So, and then, it's just, and then South Florida, Palm Beach County is becoming so unaffordable. I'm Parkland. I had a real estate agent on one of our listings. She's talking to me the other day, and her client is buying one of our listings in Port St. Lucie, and she told me that the house across the street from her sold for $70,000 over list price, which made her house worth $900,000 now. She can't even believe it. I mean, she's like, it's just crazy, the numbers that people are paying for homes in South Florida still, because there's no inventory. So until we see the inventory pick up, then, we're still going to end up, with these bidding wars. Port St. Lucie still is an affordable market, but it's becoming harder and harder for especially first-time buyers to navigate, because there's just, there's so many people coming into that market because it is an affordable market. So I mean, how long it remains an affordable market is the question here. With that being said, we're seeing that the rates are starting to go up. Talk about the Treasury and these rates and how they're, what's going on there with us.
Yeah, we're seeing, a lot of times people look to the 10-year Treasury to be an indicator as far as where interest rates are headed, and they're trending up for certainly. This morning we hit 2.22 in the 10-year Treasury. And that's like a rear view mirror, really, after the fact. Typically, it's a really good indicator where mortgage rates are going. In real time, we watch the bond markets, loans being sold in real time to pick good, days or even hours to lock your loan. But we've seen an increase in that 10-year Treasury as well, where it's it's the closest thing to mimic a mortgage, because it's typical to the time length that someone will hold a mortgage. So it's similar in yield, and it's backed by real estate.
And tell people what 2.2 means. Like, if the yield has gone up to 2.2, what's that mean?
Yeah. So if you have $100,000 Treasury bill, your yield is $2,200 per year. And so when when you look at what the yield is on something like this, you've got to, people have to understand when inflation 7.9% was as reported this last month. If you're an investor, is it a responsible thing to do to take your investors, the people investing with you, pension holders, and taking their funds and investing them in bonds that are yielding 2.2% when your dollar is worth 7.9% less every year? So there's a real challenge with pension management companies and institutional investors to place those funds and to deploy that cash in a way that's safe and yet effective long term, as far as a yield that will profit enough to provide those funding for pension payments down the road. So those are real key issues right now. And you're seeing, a sell-off, generally speaking, real big mega trend that's going on right now too. Baby boomers are starting to retire, so they're selling off some of their investments for cash flow, and so that's going to impact the equity markets and the bond markets. They start to unwind some of their investments. So it's a real struggle right now. The Fed has a real tough assignment to maintain economic growth and keep job prospects healthy. Doing both, it's a tough thing.
Right. And for someone who doesn't understand this, so if the stock market is selling off, what's happening to the bond market?
The bond market's a safety haven, right? So when equities are being being sold, the safe place for that money to flow is to a safe fixed investment. In other words, they have the safety of a guaranteed payment on that bond. So it's a safe haven for investors to go to. Gold is another one, but you know, that's really kind of a super emergency type of situation or scenario where, you know, it's like, hey, the dollar's worth nothing, all that. That's kind of a prepper type of investment, if you will. But the bonds are a safe place for those holding equities to park their money for a better time.
Right. So if the more people put their money into bonds, the
That
lower
drives
rates,
rates.
the lower
That,
rates go, right? The
that's
less people
exactly
put
right.
their money in bonds, the higher rates go.
That's exactly right, Lee. And yeah, the way I explain it is basically your loan, your mortgage, is someone else's investment, and that's the way you need to think of it when you see these rate changes and rates going up. There are contracts that need to be funded, right? There are purchases that we have that need to fund. And so to attract money to those investments from investors, it has to be worthwhile to them. So if equities or stocks look more attractive, the funds are going to be, you know, directed, or they're going to be, you know, pulled that direction. To pull that money back, we have to make that yield favorable compared to equities or stocks.
Right. And so when the yield's low like this, investors aren't interested in putting their money there as much as they would be if the yield is high.
That's right. That's exactly right.
So just to give, so this gives, you know, right now buyers an understanding of where they're at. Now, something that I'm noticing, and you tell me if I'm right or wrong, with all this inflation out of control, and then we have this war going on in Ukraine, which is just a terrible situation and seems to be dragging out, you know, and then we're now experiencing these high gas prices. We're experiencing you know, higher food costs. I think I saw an article the other day that said that the average family is probably looking at an extra $3,600 this year in just expenses to live. So with all of this going on, I feel, and you tell me if I'm right or wrong, it's a moving target every single day with rates, because, you know, we just don't know what the market's doing on a daily basis. I mean, one day the stock market is moving up, and 2 days later it's selling off. One day the bond is up, the next day it's down, you know. So are you seeing that it's really going to be hard to put in the, oh, and then I saw an article with about mortgages out with the some of these experts believe that interest rates could actually go down next year. I mean, by the end of the year. So interest rates being down by the end of the year. So what's your opinion on this for buyers? I mean, it's just one of those things. They just don't know where they're going to land right now.
Right. It's really difficult to say, but I'll tell you what, we do know that a tremendous amount of currency has been released into the market, right? Printing money, basically. And so that's inflationary. And then we've got oil supplies in jeopardy. And so I think, you know, increasing the price of oil, which affects everything. And so the concern is, and the reason some people are saying that we could actually see rates improve towards the end of the year is basically stagflation, or where the economy slows down to a grinding, you know, motion, basically because of pricing. And one of the best fixes for changing high prices is high prices, right? People stop, you know, spending, and that automatically slows things down and slows inflation. But it is also hurts the economy, right? And then we've got unemployment, and then we've got to lower rates to increase investment from company owners and those that employ those in need of work.
Well, we went a little longer in this video today. There was a lot to cover. So we'll, you know, if you have any comments or questions for Brent or myself, please leave them in the comment section below. We answer all your comments, all your questions. We love to get them. And if this is the first time you've been to my site, please don't forget to slap that subscribe button right there, ring that notification bell so you don't miss any of our real estate tips and tours. Be kind to each other, and we'll see you next time.